You are listening to the AI Investor Podcast from 24/7 Wall Street. On today's episode, we discuss AI in the headlines, recent earnings, and we look ahead to the future with agentic AI and what that could mean for investors like you. All that and more is next. Eric, we are back. We are here talking about AI. We are here talking about AI investing. I took a quick look at the portfolio this morning, back in the green. Some things are looking good here. I see some Broadcom doing quite well, which I'm sure we'll discuss because I know we're going to be discussing earnings later today. But first, I just wanted to talk about some of the AI in the headlines. You know, one of the companies that you and I talk a lot about privately and is really interesting right now is Waymo, this sort of potential sleeping giant in Google, which is also, of course, an AI company and an AI play. How big do you think Waymo could get in 2026? I mean, some of the rideshare figures that we're seeing are crazy, you know, expansion into cities like Austin, I think a rumored expansion to an announced expansion into Miami. And some of the velocity of ride sharing that we're seeing out of Waymo in cities like San Francisco is just stunning. I think I saw they're larger than Lyft now. Is that correct?
Yes, they are larger than the ride sharing companies and kind of the markets they've had the longest history in.
Mm-hmm. And one of the things that's really interesting here, this also ties in with something we had talked about in our last episode, which is the potential application of AI to robotics. I mean, in many ways, Waymo is just a large mobile robot, right? And this might be one of the first real valid use cases where people can really internalize how AI could be impacting their physical lives.
Yeah, 100%. So I think there's a few interesting things here. You hit the nail on the head when you said this is going to be one of the first use cases where this impacts people's lives. Second, we have this pretty, what you want to call it, an interesting story of LA, where, you know, you get to these edge cases. If you called an Uber into the areas where protests are happening, the driver would just turn around and say, nope, the self-driving car doesn't have that decision making. Mm-hmm. So the protesters start calling a series of Waymos into the protest area and burning them. You know, it's interesting, Austin, I believe you said it. There's an old saying that all PR is good PR. And if you look at search trends, well, Waymo is doing this, you know, world-changing technology. It really took an event like this to kind of get it into kind of the broader space where so many more people even know it exists because it's been limited to a small number of markets. So let's break down. You had talked about the numbers. Mm-hmm. So Waymo, they had 1 million rides completed at the end of 2023, 5 million by last year, and they're already over 10 million rides at this point in the year. So, you know, you are seeing that upwards trajectory where I think this story is going to become a lot more front of mind for people. So far, Waymo, I should say, has had more limited markets. You know, San Francisco, LA, Austin, Phoenix. It's about to rapidly expand. I live in Washington, D.C. It's coming here. It's coming to Miami, Houston. It wouldn't shock me if by the end of 2026, we had Waymo targeting something in the neighborhood of 20 cities. So if you live across the US, there's a good chance there's going to be Waymo deployed in active use pretty close to where you live in the next, 1 to 2 years. Now, what's really interesting about Waymo itself? Well, there are over 50 million driverless miles, I should say. And Swiss Re, which is a major reinsurer, by their estimates, Waymo's caused 90% less bodily injuries and 86% less property damage. And again, with technology like self-driving cars, it's as bad as it's ever going to be. It's only going to get better. Now, Austin, I know when we had first started working together, I believe when Uber was relatively a new app coming out, and what you saw from people was, a big reason for the uptake in Ubers themselves was that it was just a better experience than cabs. It wasn't just ordering it on the app itself. It was the trust. It was how much you knew you were going to pay. Even if Uber was priced at a premium, which initially was, people just wanted to use it over taxis because it was a genuinely better product. When I talk with people who have been using Waymos, when I look at chatter online, I see a one-to-one relationship in the way that Uber disrupted taxis with Waymo's disrupting Uber. In fact, in a lot of areas like San Francisco, Waymos generally cost 2 to 3 times the cost Yet there's a massive backlog for them because people just prefer using them. And you can imagine many of the reasons why. It's just a lot more comfortable to be in a car where you're by yourself. Now, the next battle line is Tesla launching their own self-driving network. That's supposed to happen June 22nd. They just changed that date. We're filming on Thursday, June 12th. Tesla just pushed it back yesterday. But the main battle line here is mostly around safety. By Tesla's own kind of calculations, they see their full self-driving as 54% safer. Waymo, we shared the figures from Swiss Re that were closer to 10 times safer. And that comes at a cost, a very real cost. I've heard the average Waymo costs about $180,000, where Tesla is aiming for a much cheaper solution, relying just on a limited number of cameras. So, Austin, I think for now, I just wanted to talk about this story we had in the news because of what's going on in Los Angeles, but also frame up just what we are seeing, because as you noted at the start, this is one of the clear stories of a mind-blowing AI application hitting the mainstream. And if someone says, I've just seen Waymo on the news, we're about to see an acceleration point where it goes from being something you read about to something functioning in your own city. So I don't think at this moment we are looking for any investments, because Waymo is such a small piece of Google and Alphabet itself. Tesla's got a lot more going on to its story. You're kind of left with a lot of the component plays. I'm not in love with a lot of the options you have in things like LiDAR. But we did want to talk about this because it is going to be something capturing the imagination. And the rate at which it's taking off will surprise people. And as you noted at the start, might be kind of a preview for fields like, robotics itself.
And I would just add two things there. This is a sector to watch. We're not yet doing component plays here. And part of the reasons we might be in very much like a beta, a Blu-ray versus HD technology battle here where it's LiDAR versus camera based. You talked about Tesla as the biggest competitor to Waymo. Waymo notably has cameras, LiDAR, and they're much more expensive and complicated. But arguably that, the case that they would make is that makes their vehicles safer. Tesla has the advantage on the manufacturing side, price-based, but far fewer sensors, and they are camera-based, they're vision-based plays. So it's hard to know which component play makes sense until we know which technology is really the one that is going to win and proliferate and end up being the real winner for this form factor. One other thing I just wanted to note is, for people who are looking at the potential of a company like Waymo and drawing the analogy to a Uber, I think that that's the wrong analogy to draw, because Uber famously works best in high density urban areas where you have the supply demand balance, where the service makes sense. There are enough cars on the road, enough drivers on the road. Waymo won't suffer for that. Waymo, if this proves out in dense urban areas, should be able to proliferate to suburban and rural areas eventually with much better economics than a company like Uber, which has to worry about both driver and passenger balance economics. So this is a technology that actually could proliferate much broader culturally than Uber. But let's keep going here. There's a lot of other news to talk about. I don't want to get hung up on self-driving cars. OpenAI has an insatiable appetite for compute. They famously paired up with Microsoft in their early days. Now they're pairing up with anyone and everyone who will give them compute, including Google. What is going on, and what does this say about AI demand?
Yeah, one of the key storylines we covered at the beginning of the year was there's a major sell-off in AI stocks because of DeepSeek. There's geopolitical reasons. And a third major reason was reports about Microsoft basically scaling back their ambitions. Now, we had said that we weren't as concerned with this because, number one, Microsoft very publicly had broken up with OpenAI. So if you're looking at Microsoft decreasing spending, well, they had a breakup with their biggest partner, and you need to watch for where demand was headed with, its new partnerships. And in spite of all that, despite Microsoft losing its biggest and best customer, they were still projecting growth next year on their capital expenditures. So let's fast forward to today. Oracle reported last night, Wednesday night, the stock's up 8%. The headline is they're predicting a massive acceleration in AI revenues next year. Their growth rate for infrastructure is supposed to go from 50 to 70%, and their RPO, which you could think of it like a backlog, that's projected to grow another 100%. And then you have the news that Google is going to work with OpenAI, giving them one more source for this compute demand. So, also, I think the big picture is there are two main costs when we're looking at all these companies in the data center chain, whether it's NVIDIA or up to a lot of these optic plays that we've talked about. One cost is training. The other cost is actually running the models themselves. So the training costs, the fact is, a lot of the belief post DeepSeek was that training simply too expensive, and we're going to see companies pull back on this. We're seeing the opposite right now, which is OpenAI, they cannot move forward with their next major generation GPT-5 until Stargate is online. And then they have a second wave, which is inference. Austin, right now, OpenAI, they are seeing 90% retention after 1 month, 80% retention after 6 months. It's not just the fastest growing consumer product ever. It's also the most sticky. That's the best in breed companies in terms of retention would kill for 90% after a month, would kill for 80%. So there's huge usage. And then there's the side that this additional training is also needed. So, I would say, Austin, the big bullet point here is just we're beginning to see a storyline of acceleration into 2026 far beyond what Wall Street's been estimating months ago, let alone today, because if OpenAI is waiting for more capacity to do this pre-training people thought was going to moderate, all the other big companies are going to have to follow that same game plan. And number two, the consumer usage of AI is exploding, which is causing storylines like OpenAI going to Google. So we'll cover this more and more, but this is the main theme of today's show, that when we started the show back in 2024, we said, well, we're not going to see the slowdown people expect in 2025, but that's gotten pushed into 2026, and that's what you worry about. And now we're starting to see 2026 not just be a period of moderation or fears of worst case scenario. There's a lot of talk of acceleration, which might be crazy to people watching because, everything is wrapped in fear. We had this DeepSeek moment. What if AI stops? And all of a sudden that narrative, it's really changing when you see what people are saying and you see the actions of these companies.
Mm-hmm. And now, a counterpoint to that is I want to talk about this Apple illusions of thinking paper, because Apple is one of the largest tech companies that, like Google and Microsoft, was really hot on AI, but in their most recent Worldwide Developer Conference, there was way less AI, way less Apple intelligence than in the prior release. So on one hand, we're seeing Apple sort of stand alone here, and some of the steam is coming out of their own AI enthusiasm. They're releasing this illusions of thinking paper that sort of puts a little bit of cold water on the AI narrative. So, but everything else we're seeing is an increase in demand and compute and inference from everybody else, and Oracle and Microsoft and Google. So what is going on with Apple? Are they, is this a cultural change? Is this something, are they seeing something other people don't? Why does Apple sort of stand alone here in this super major AI space?
Yeah, Apple's such an interesting company, right? Because everyone else is spending tens of billions of dollars on CapEx, and they've kind of not played that game. They can do that in part because they have unique distribution, right? At the start of smartphones, you have said their greatest weakness is something like search. All these Google services, they don't control that, and they're beholden. But the end outcome was they end up charging Google $20 or $30 billion per year in pure profits to become the default search engine. So them being that initial point of distribution as the operating system for all consumer devices allows them to play a little bit of a different game. But it's also kind of in their best interests to kind of talk down some of the areas that they're not competing in, which is a bit what this paper did. It comes from Apple researchers. And basically, we've talked about on this show, our belief is that in December of last year, the birth of new powerful reasoning models, which really began when O3 was released on December 20th, was the next step change in AI demand. And what Apple's researchers came out and said is that they believe that these reasoning models that are coming out, through a series of puzzles that they tried having them solve, that they put on the paper, basically had just a lot less capability than people believed. Essentially, they're just much better at pattern matching than people give them credit for. So this got a lot of attention, right? Because it's potentially saying it's another potential piece of evidence that we're in a bubble, that AI is just going to hit a wall where when you ask it to take that next step, the next step being discovering novel discoveries, asking AI to start doing things like finding cures for diseases, it's not going to be able to make that jump. And if that is the case, that would be tremendously bad for that future of Outlook and all the spending that's happening right now.
Right.
So my take on this, and again, I'm not an AI researcher. My main job is to basically find who I believe are the smartest minds and people that have great track records on this and evaluate who I think is the most accurate. And I don't find the paper especially compelling. I won't get into too many details, but a lot of people have poked some pretty sizable holes into how this study was conducted. But I do want to point out, Austin, one of the other big storylines that's, maybe on the fringes that if you're investing in AI, you don't see was Sam Altman, who's the CEO of OpenAI. He released a blog this year, or this week, I should say, just about his thoughts on AI. It's named The Gentle Singularity. You could search that. You could search his blog and you could find it. But in layman's terms, he's making a lot of predictions you can hold him accountable to. And in his belief, 2025, the story is the rise of agents. That's something we agree with. We've been saying since last year, mid last year, we've always said we believe the narrative this year, especially in the back half, would be the rise of agents. He believes 2026 is going to be the birth of novel insights from AI, and 2027 is robotics that can change the real world. So, this lines up, Austin, right, with a lot of storylines we're talking about. But he is essentially dropping the gauntlet that, as I mentioned earlier, OpenAI is waiting for Stargate to become operational to basically train their next version, GPT-5, to have the capability to do that. And once that's happened, he believes those novel discoveries will start becoming a storyline next year. So that becomes one of the things that we will be actively tracking on this podcast, that if you start seeing novel discoveries from AI, we are on pace. And frankly, if AI starts making meaningful novel discoveries, that is the strongest validation yet that it becomes the main economic driver for the rest of our lives.
Mm-hmm.
And if that is the case and you're not actively investing in this, good luck to you, because that will be a little bit of a rubber meets the road moment we're going to be watching out for.
Right. And, to anybody who's listening to that and saying, oh, well, maybe I'll wait until AI has proven in the novel discovery framework before I become an investor, I think that would be a mistake as well, because that's not to say that the current versions of AI and LLMs don't have incredible economic forces and tailwinds behind them. You talked about medicine discovery. Famously, AlphaFold, detected protein foldings and predicted 3D structures of proteins, which is a very complicated thing to do. And it didn't necessarily uncover new breakthroughs per se, but it completely supercharged the discovery of these folding structures that would have been discovered just over a much longer time frame. So it pulled forward all of those discoveries faster. Now, that might not necessarily have been novel. It was applying techniques that, as I understand it, I'm certainly not an AI researcher, but it was applying techniques that we already had and knew, but just completely supercharged them and allowed us to make discoveries earlier. When I read or tried to read, I should say, the Illusions of Thinking paper by Apple, it sounded a little bit to me like a case, maybe it's just a case of someone coming from sour grapes a little bit. Like, Apple's always been a bit of a tastemaker company and designing the thing you didn't know you needed and then you can't live without. And they've been uniquely good at that, perhaps the best of all time. But technologically speaking, a reasoning model just gives up a lot of that to the model. And it might be just culturally antithetical to what Apple is built on as a company. So, you got to pay attention to everything that happens in this space. Apple's incredibly gifted at what they do. But this didn't change my thinking about the potential of what we're seeing.
And I do want to double click on one point you made there that, you can always say, I will just wait for this next threat or overhang to resolve before I invest. That's why it's so important to go through the cycles that as new trends happen, that you're able to see in real time. There is always something new that says there's a reason I shouldn't invest in this today. So if you're waiting for one threat to go, there will be another. Nothing is an absolute slam dunk. Last week, Austin, we talked about the best time on a risk adjusted basis to buy Apple was 6 years after mobile started. The trough of disillusionment for the internet itself came 8 years after it started. There's always going to be some new threat that, unless you followed one of these cycles to truly appreciate that you're never going to make money investing in a perfectly rosy picture. It's just really hard to understand that. That's part of why we wanted to start this podcast, was to give that record of investing throughout the AI age. Because at some point in retrospect, I believe it'll be, of course, why didn't you invest in that? AI was obvious.
Right.
And it's not obvious. And we've broken down all the areas where we had to be incredibly counter to the dominant narratives. You'll be able to go back around when we did our DeepSeek episodes, where we called it before it happened, where we broke it down after, and we have been knocking down a lot of these, bear cases. It's not because we are blind cheerleaders for AI. Far from it. We are people who want to make money, and the only thing that makes you money in the long run is what happens in reality. But again, we have believed that this story is happening, and we have gone through many of these threats in the front half of the year to have a show today that is largely just focused on acceleration and bullishness, which couldn't be any different from what we were seeing 5-6 months ago.
No. That's actually a perfect transition to our next topic, which is Meta. No company exemplifies that need in recent memory than Facebook for me. So Facebook, now Meta. Facebook famously went public and traded below their IPO price for a number of months, I think like significantly down on worries that they would not be able to monetize, get this, mobile traffic, which is now absolutely laughable, right? With Instagram. And I mean, the idea that Facebook wouldn't be able to monetize mobile impressions is ludicrous today. But at the time, it was a really strong narrative. And investors, if you had waited for Facebook to prove that you missed out on hundreds or thousands % returns since their IPO. But speaking of Facebook, Zuckerberg always pushing forward, solved the mobile ad issue, famously bought WhatsApp, pushed forward into the metaverse. AI is his new terrain where he really wants Facebook to win. He is personally recruiting for superintelligence via a company called Scale AI. What's going on here? This is kind of a big story. Lots of money being thrown around, young talent. And from what I read about this, Zuckerberg is personally frustrated at the slow pace at Meta and getting involved in doing a lot of the recruiting himself.
Yeah, it's a super fascinating story. First of all, just one plug. I did appear on Stock Club, which is a podcast this week. If you want to download that, it's kind of my broad thoughts on the AI space. And I talked about Meta and how that fits in as an AI company. One of the points I made on that podcast was essentially, if you go back and you look at, we had that belief that Meta, Facebook at the time, would be unable to monetize mobile, turned into a generational opportunity. If you look at Meta's bottom at the end of 2022, when it went down to like $80 a share, that was within weeks of the release of ChatGPT, that famous moment that kind of changed the inflection point of AI. And since then, they're back to $700. So, just kind of a storyline you don't hear much about, but this is a company that has transformed thanks to AI. But yeah, the story is they spent, I believe it was $15 billion buying a 49% stake in a company named Scale AI. It's basically an acqui-hire of their CEO to get around kind of limits and antitrust that's happening right now. But the report is Zuckerberg, as you mentioned, he's personally hiring a team of 50 to 100 people that are going to sit next to him, that form his super intelligence team. He's personally contacting them. I've heard that one of the biggest problems to the recruitment is people get an email from Mark Zuckerberg and think it's just spam. So they ignore it, and you need all these different points to reach them. But he's interviewing them at his home in Tahoe, and he's offering 7-figure, 8-figure, for some people up to 9-figure compensation packages. And in layman's terms, that is $100+ million compensation packages. Austin, I think the big picture is, Meta itself, they're spending $65 billion this year in CapEx. That's the most aggressive company because, well, Amazon might be spending $100 billion or more in CapEx. They're renting it out for cloud computing. Meta's using this all internally. So we've talked about Meta. It's a company that we own in the portfolio. And you've got two sides to kind of this AI puzzle. You've got one hand, data and distribution is more important than ever. We talked about how Apple's unique advantage is they have distribution via being the starting place for the operating system. That gives them a unique way to play this. For Meta, they have all of the users creating data that is on their platform. They have the distribution of everyone signed up. So they can plug AI into their products, AI in ad creative, AI in terms of making their product experiences more sticky, coming up AI in things like chatbots that are agentic. But the second part of Meta's AI strategy, as you noted earlier, is where they're behind, which is actually building the models themselves and in this race to be in leadership. On that front, they're behind Google. They're behind OpenAI. They're behind Anthropic. They're behind XAI. They're probably behind DeepSeek and some other competitors. So what's going on right now is Zuckerberg is just going all in, and he's plotting a path where Meta might be spending more than $100 billion a year. But, Austin, again, it's what's the theme of this podcast? What's the theme of the news across the past year that people were expecting this bubble to cool? But we previewed Oracle with eye-popping numbers today. Zuckerberg doubling down, focusing on building a team that he's paying people $100 million plus to form the basis of. We've talked about other companies. We've talked about Waymo. We're going to talk about things like Broadcom on our earnings. And it is this story that we were wondering if AI might see this deceleration, but point after point after point goes towards potentially an acceleration, especially in the back half of 2026. So again, if you wrote one thing down from this podcast today, it's news point after news point after news point, all these data points pointing towards something inflecting right now. And it's potentially very powerful if you're an investor.
Let's move on to earnings because, of course, the truth is going to be in the data here. And I remember in mid-24, there were similar points about, which is what you're alluding to, of course, that AI would reach these points where it was like impractical to use and it would slow down. And you had also alluded to some air pockets as a potential, but what we're actually seeing earnings might be a little different. And one of the things that I would just remind people as you're thinking about investing in new trends in sectors like this, as technology becomes more affordable, it proliferates more broadly, or it's kind of related to Jevons paradox a little bit, right? Like as cost per compute goes down, as cost per token goes down, as applications become more, cost effective, there are more places you can inject it. So long term, that's all we are going to see is an increase in usage here. But let's actually look at some actual earnings. We've got Taiwan Semi and Broadcom. Where do you want to start?
Yeah, let's just Taiwan Semi. I mean, it's fascinating. Number one, they have to report monthly earnings. It's just part of being on. It's a Taiwanese stock exchange rule. Number two, if you thought about the AI kind of value chain as a river, Taiwan Semiconductors is the headwaters. It's where everything flows from. So they reported their revenue for May, and the bottom line is it came in above expectations, growing 40% despite all of the, fears around tariffs and geopolitical issues. So that's a deceleration from the growth rate the prior month, but it's above expectations. And the headline is, it likely means they're going to once again exceed expectations when they next report earnings. They're going to likely take their revenue figures up for the year. So number one, Taiwan Semiconductor is a portfolio holding. It continues to do very well and perform very well. And point number two is it's the data point that which all other data point flows from, and it looks very good right now.
Okay, and on to Broadcom, right? This is the agentic AI episode. I want to get to our topic of agents, so let's get through Broadcom next before we move on there. What you're seeing out of this, I think, is a validation of the exact narrative you're talking about, which is AI not taking this breather, but actually accelerating. Talk to me about what you heard out of the CEO and what you saw at earnings.
Yeah, and I mean, one kind of just point of clarification. I think the news was just so important to get to this week that we are spending more time. So we'll tee up agentic AI. I think we'll do a more robust conversation in later weeks. We don't want to, we realize people have a limited amount of time here. But Broadcom, it's a ho-hum quarter, slightly above Wall Street's expectations for last quarter, slightly above next quarter. It definitely, it wasn't like prior earnings where they jumped 25% the next day. And you shouldn't expect that for a company of their size. They're worth more than $1 trillion. But AI revenue, the big picture is it grew 46% last quarter. But what they're projecting towards is 60% next year. And here's what's really interesting. The CEO on their conference call said he expects that number to potentially accelerate in the back half of 2026. So Austin, what we're going to on this episode is again and again and again, we're hearing this talk of acceleration, and then we're trying to triangulate our data points on it to see what's happening. And when you look at Broadcom, who are their two biggest customers? Well, they make custom chips. Their biggest customer right now is Google. And the next big customer that's coming online is Meta. What news stories did we talk about earlier? OpenAI going to Google and Zuckerberg going all in on AI with. And who is Google and Meta sharing their plans with for the long term? They're sharing it with Broadcom because these custom chips take 2 to 3 years from planning to go into production. So what's the logical conclusion that we can see with actual data and actual plans? The fact that both Google and Broadcom are planning for a significant ramp in the back half of last year. So Austin, it's more data points pointing at the same thing, which is rather than 2026 being a year of concern and wondering if the bubble pops, to a period of acceleration that's driven by, once again, two things: increasing usage of AI. Because again, we talked about the numbers with ChatGPT and how much customers are engaging with and love it. Then there's also the expectation that the key areas in the next year, such as agents and novel discoveries, will be massive. And then there's just buy-in from key decision makers who are making these plans, and that's Zuckerberg, Altman, the CEO of Google. And, if this plays out, the bottom line is, I would be very surprised if some of the most battered areas of our portfolio weren't winners over the next 18 months or so. So I just wanted to use Broadcom. We teed up stories and now we put a bow on it, right? This is sometimes I will say something about where I expect AI demand to go, and it's hard to follow the logic through. This week, you have a lot of stories where you've got the story and you're able to track it all the way down to these other data points of companies reporting. So, it's been extremely bullish, and I've said in the past, I'm just really excited about where AI is headed, and it's weeks like the past 2 weeks that really validate this.
Yeah, and I hope investors are paying attention here, because you did not one but two buys of Broadcom, both in late 24. Both of those positions are up about 40% today. One slightly more, one slightly less, but some impressive returns there out of an already gigantic company that is looking ahead to potentially fantastic returns in 26.
Yeah.
Eric, one of the things that's most interesting about what we're seeing in AI is just the broad applications and the new things it unlocks. And one we've talked a lot about is robotics, which I'm sure we'll do future episodes on. But that's something that people can visualize, right? They have an understanding or an idea of what robotics are. Maybe it's robot delivery or Jetsons or whatever. But agents and agentic AI is a little different, because it's harder to physically imagine what an agent looks like in the world. It's purely digital. So can you please help me to describe for our leaders, what is agentic AI? Let's start there. And then we can start discussing the investment landscape and potential applications.
Yeah, that's a great point, Austin, about how hard this can be for people to conceptualize. So I think we'll do a more full featured, as I noted earlier, agentic show. But I didn't want to take for granted that we do need to kind of break this down from a base level, because this is a show not for experts in AI. It's a show for the masses to kind of be able to track, a really important trend as it happens. So what are agents? I think the simplest way of putting it would be AI models can be trained to use tools to access information and suggest a real world action. So you could ask, why is this important? Well, it's going to make software far more personal. And that's really important because you look at comments from OpenAI CEO Sam Altman, a man we've talked a lot about on this show, and his next big bet is personalization, to make AI something persistent with you that you're having conversations with throughout your day. And agents are also going to be absolutely essential to the next phase and the value proposition of software. The tricky part is software is going to need some form of unique data to make decisions on which you're maximizing the value from agents. So we're probably going to have agents as something that separates kind of the wheat from the chaff in terms of which software companies are investable over the next, 0 to 5 years. So let's break down what kinds of companies we're going to look for when we're doing an analysis, and we're looking for stocks that have tailwinds from the growth of agents. You could look at a company like Snowflake. In my mind, they're very likely to be a key beneficiary as, they can easily build tools onto their platform for this agentic age. And we'll see rapid revenue acceleration as agents take off because they are a data platform. They are that foundational layer. And I think we're going to see a couple manias in the market in the upcoming year around IPOs. And one will be a key competitor of theirs, Databricks. Another will be Anduril in, drones and a lot of the next generation military technology. So, I would say we're going to aim to find 2 to 3 companies at this kind of foundational layer around data and how you begin the initial building blocks for creating agents for software. Second, we have companies in our portfolio currently like GitLab and Synopsys that we believe agents are going to make their software offerings incredibly more valuable over time. I don't believe this is true of all software companies, right? And this is kind of the game we're playing right now of separating who has the right traits that agents will accelerate their revenue over time versus who this becomes kind of a competitive threat to. And I think we'll probably have 5 companies or so in this bucket of, the companies that agents really is going to be able to accelerate their revenue. And finally, I've kind of got a last bucket, Austin. I'm calling it compliments. I'll think of a better name in the future. It's terrible, but let's just throw Cloudflare in there. Agents will lead to far more demand for inference usage from users, which I believe can lead to a next tailwind for Cloudflare to grow. This bucket's likely smaller. It's kind of my everything else bucket, but I think we're going to find some opportunities that don't clearly fit into our other opportunities of, kind of those companies around the edges that just end up with big tailwinds at their back, thanks to the growth of agents. So, Austin, that really summarizes it. I took down a list of some stocks to watch for agents. Some of the names that I've been looking at: ServiceNow, Atlassian, Salesforce, Datadog, Monday, Workday, Confluence, Box, Rubrik. You've got a lot of broader cybersecurity plays. So that's not comprehensive, but if people are trying to understand some of the names that we're going to be starting with as we, dive deeper into this, that's a really good starting place if you're conducting your own research about this trend of some of the companies we think will be beneficiaries.
Thank you for sharing those names. That actually, it points me in a much better direction here, because one of the biggest questions that I had about agents is, how do they become useful to an individual when you need this sort of permission layer to access all of these different tools. And, maybe I'm overthinking the complexity of that, but my first thinking was, a company like a Microsoft or a Google or an Apple would be the best delivery mechanism, or be able to offer their users the best agent experience because they have these walled gardens where everything is seamlessly integrated. But I actually don't know that that's the case anymore, because if you think about your own digital usage in a day, it will span, right, Gmail and Facebook and Excel and all these, LinkedIn and all of these different tools. So it seems like the best agent is actually someone that's independent of these mega tech companies. I mean, certainly we should expect to see them try their own versions of agents. And I think Gemini announced their own like lightweight agentic-esque tools about 2 weeks ago. But it seems like to really be valuable, we need to actually look outside of these mega tech companies too, like a ServiceNow, an Atlassian, a Cloudflare, someone that's able to plug in across platforms and facilitate. Am I hearing you correctly in that that's more the way we want to think about this right now based on what we've seen?
Yeah, I think so. Obviously the mega tech companies, we're in year 15 of winners keep on winning. Right? Just about every single trend, it's like who's a winner makes seven. Facebook, Meta has incredibly unique data that's going to lend very well to agentic AI. Apple, if they can execute properly, have a great storyline around this. So I think there's going to be some winners from that Meg 7 group. But yeah, I think one area is what we started with this podcast. Our first analysis was we started with data centers to say 99% people, if you ask them for an AI stock, couldn't really go much deeper than NVIDIA, right? NVIDIA is known to all, but there is a really powerful value chain of other companies that will succeed as well. And yeah, I believe that we have that with agentic AI, that it's going to lead to some stocks, especially in the software space, that are going to have their value proposition whittled away, but it's probably going to provide 10x opportunities to others. And that's our goal, to, discover those 10x companies right now and get them in a diversified portfolio where if 2 or 3 fail, but we've got one 10x, we're still winning at a really outsized rate.
I love that. Right? The 10x winners can carry the portfolio. And just a couple names to watch, which you'll certainly hear us discuss more in future episodes: Snowflake, Databricks, GitLab, Synopsys, and Cloudflare. Most of those in the portfolio. ServiceNow, Atlassian, Salesforce, Monday, and Box, companies to watch going ahead. I believe Snowflake has rolled out some agentic tools already, or they've at least alluded to them. So already sort of making inroads in this industry there. So yes, we'll leave you, our listeners, with some stocks to watch going forward. Eric, any other final words for our listeners as we close out this episode?
Yeah, I think we've got $5,000 left in the portfolio before we're fully allocated. And then, we'll sell off some positions to keep buying. I was going to just add $5,000 to GitLab. They were down 10% yesterday after earnings. Sometimes earnings analysis is nuanced. Sometimes it's very simple. This one's pretty simple. They had forward guidance for this year that was almost exactly in line with Wall Street. As I've talked about before, when you're buying these software plays, if they're not getting some acceleration from AI, they're not going to be winners in the long run. So GitLab sold off. The end of the story, Austin, is people right now, the market's back to fully valued multiples. I think Oklo is up 200% in the past month. It was running yesterday on a contract that was announced 2 years ago. Quantum computing is flying. The frothiest ends of the market are feeling like they were 6 or 7 months ago when I was saying I was really worried. And GitLab, after earnings, they're trading for, their enterprise value relative to their sales this year, about 6.47, to be precise on that. So again, I mentioned earlier, the portfolio, it's a diversified group. We're going to have eye-watering valuation, really steep companies like a Cloudflare, Snowflake, mixing in some kind of quote-unquote value plays of companies that still have great growth. GitLab's still growing at 27%, and the market's handing you a much cheaper price. I'm going to take advantage of that. So we'll add just a small slice of GitLab. This could be your opportunity if you haven't purchased it. I don't think you should look at its return today and be overly scared off from that. I think it's priced attractively, and not with the incredible levels of risk you might find with many other stocks in the market today. So we'll add that. And from here on out, we will kind of sell some stocks to continue rebalancing the portfolio.
Boy, talk about burying the lead. Save that one for the end. But I do love that. Surprise buy, making us fully deployed. And then you heard it here, investors, now that we are, fully deployed in the portfolio, that we are going to start making some sells in order to make some buys. So, we've been on the buy side until now, and we're going to be shifting our gears a little bit and moving money around between opportunities. Eric, thank you for your thoughts today. Thank you for surprising investors with that GitLab purchase, and I look forward to chatting on the next episode.
All right, sounds good, Austin. See everyone in a couple weeks.